Good morning and welcome to the VSA Morning Miner. It's Monday, the 20th of February. I'm joined by Paul Rankin. Paul, how are you today?
I'm pretty good, thank you. How about you?
Yep, all good, thanks. Busy weekend of news in the lithium space. So we'll start there before getting into this morning's RNSs. Announcement, what is it? Announcement or speculation that Tesla are looking at acquiring Sigma Lithium, the Brazilian spodumene development play.
Yes, that's right. It is a Bloomberg report out on Friday, depending on how reliable their sources are, I guess, that Tesla is talking with Sigma Lithium about a possible M&A transaction. Sigma shareholders certainly like to see that. Their shares after hours traded up 24% on the news, and bringing their market cap to about US $4 billion puts it at the top end as far as valuations on spodumene producers, both Australia, Canadian listed. So this Sigma is Canada and NASDAQ listed. The key point, I think, is that Tesla is looking for some really big supply, and Sigma has two production options yet to grow its current commitments on its project there in Brazil. The Tesla announced the new gigafactory that they will be building out, and that I had calculated that one alone, that project, new gigafactory, will need essentially 4 Sigma lithiums just to feed it as one plant. So that's the drive behind Tesla, is they've got to source the supply for their expansion plans in building cells.
Yes, and well, 4 billion is certainly up there in terms of absolute numbers, but if you compare it to the headline post-tax NPV that the company has published for its projects, that's 15 billion. So they might be looking for a higher number than the 25% increase over the weekend to actually execute a deal. I guess the other thing is, obviously we've now started to see a couple of upstream or downstream users make upstream investments to secure supply. I guess the rationale being that if they don't secure supply, ultimately you will get demand destruction if they can't fill their factories, and the pace of EV penetration slows. If you're unable to fill those in a timely fashion, you can get a scenario where lithium supply comes online because there's a lag, but the downstream are starting to slow their investments because they're just not seeing any physical lithium.
Yes, that's right. They may want to take orders in because they would have capacity at the factories, but the factories can't supply enough raw material to fulfill those orders. So they lose market share as a result against their other gigafactory competitors, and the EV deployment into the general global economy just doesn't go as fast as otherwise they'd like it to.
Yeah, exactly. Right, moving on. Anything else?
Yeah, Goldplat's full year and Q2 results were released. The key point there is their shares have been in suspension here for some weeks, awaiting these full year results because they were delayed in order to complete an audit of accounts on an annualized basis. Profits are up at Goldplat for the year, but they have cautioned or let investors know that the Eskom power curtailments are something that they are less capable of dealing with there in South African operations because their margins aren't wide enough for things like putting in diesel gensets to augment those power curtailments. So they're looking for optimizations and essentially processing operating opportunities to work around those disruptions to even and steady power, grid power. But in my view, yes, they have better profits for 2022, but because they don't lack this flexibility, it's not looking likely that they will have a good profitable year for 2023 until they can do something about it.
Yeah, South Africa's still a tough place to operate, as we've been saying a lot recently. Anything else, Paul?
Castillo Copper, which is the AIM quoted firm in exploring the Mount Isa district in Queensland, gave us an outlook on what they're going to try to focus their activities on in 2023. For them, it's going to be all about the big one, high-grade copper discovery that they've made. It's relatively low tonnage at the current time of just over 2 million tons, but it is high grade, and with the excess processing capacity in the Mount Isa district, it makes sense that if they are dealing with working capital constraints, which they are, then to try to move toward a quick to production strategy for toll milling locally is probably a good plan. They'll also be looking to expand the mineralization along that immediate corridor of mineralization at Big One. But there are other properties they admit they would just as soon at this point like to joint venture out to other local players.
Very good. Okay, Paul, we'll call it a day there and be back tomorrow. Thanks very much for your thoughts.
Very good. See you then.